There is a game going on right now. Here is the game. The game is to take your money, your Bitcoin, from your pocket and put it into the pockets of institutions and whales. This market action has been playing out forever in the crypto space, but it's only getting worse as we see more and more of these Wall Street type institutions entering into the market. They are not our friends. They are not our allies. They are here to screw you over as much as possible and try to wreck you and, of course, corner the supply for themselves. These guys have near infinite resources when it comes to money. So they have the ability to play that long-term game to corner the market, get supply in their hands, and that is exactly what they're doing with these kind of market events. They also have the connections, money, and power to be able to do, like has happened this week, to run half a dozen different stories in the media to freak out your average investor and to convince them to panic sell. So in this video, I'm going to be breaking down this topic a little bit of the manipulation going on in the cryptocurrency markets. My name's Lark. Every day I make videos talking about cryptocurrency investing. So if that's a topic that you would like to learn some more about, make sure you subscribe to the channel, gently tap on the thumbs up button, and of course click on the notification bell to know when I put out a new video. So let's start off here with this article from Decrypt, 5 reasons for the crypto market's $500 billion bloodbath. So a lot of things have happened this week in the cryptocurrency market. Of course, we had the China story, which I talked about yesterday, that China's banning crypto, but it's actually not banning crypto. It's just a reiteration of earlier policies, which simply state that certain firms are not able to do cryptocurrency transactions. These rules have been in place since 2017. They were just reiterating them for the public to cause a bit of panic in the market. The timing of that, of course, is very, very interesting when you think about it. Then, of course, we have Captain Chaos here, Elon Musk, who was been just tweeting all kinds of crazy antics over the last week or so. First off, Tesla wasn't accepting Bitcoin because of the environmental impact. Then he insinuated that Tesla might have sold their Bitcoin. And then he said Tesla hadn't sold their Bitcoin. And today he's tweeting, diamond hands hodling for Bitcoin. Elon, man, agent of chaos indeed. Then, of course, we had leveraged positions getting liquidated. So this is a situation where the other stuff, the falling prices, the panic in the market, tends to reach a cascading effect, because when you have so much leverage in the market, and there is a lot of leverage in the market right now, when you have that happening and people start getting those calls, they start getting those liquidations, then the market drops faster and faster and faster because more and more people are getting liquidated, and when they get liquidated, they're doing market sells on these orders, so it just drives the price further and further and further and further down, and that's when you get these just massive sell-off wicks happening in the market. We also had some FUD coming up about Tether's stablecoin reserves. That's, the Tether stuff. How's it still a story? It's still a story. People still, I guess, get freaked out by the Tether stuff. We also had tax day in the USA, so some people have been speculating that a lot of US traders would have been selling off crypto in order to pay for taxes, to lock in profits, all that kind of stuff. We also had the OCC with a new director saying that he's not, the biggest fan of crypto and that more regulations are going to be coming. There's other things as well. You can see here they said the broader markets have been on edge as a result of the macroeconomic factors, inflation warnings, et cetera, et cetera. This is a lot of stuff for 1 week. And look, stuff like tax day, that's always going to come, and the broader macroeconomic situation with inflation, all that stuff, that's not particularly something that's changing all the time. When you start to look at like the China story, why yesterday of all days does China or these Chinese agencies put out this reiteration of a previous policy, which of course then gets misreported in the Western media, starts getting shared around by the Western media, It's freaking ridiculous. This is market manipulation. Now, I just want to say, because I'm sure someone out there is thinking, Lark, what are you talking about, man? Okay, it's only manipulation when the price goes down. Well, it's manipulation when the price goes up, too, to be honest. This market is rife with manipulation because there are so many offshore exchanges that exist in zones of very, very scant regulation. The ability of different market participants to be able to move the price of these assets is very, very real. And so they do push the prices up and they do push the prices down. We have whales and institutional players that are in control of serious percentages of the supply. And we've seen these kind of manipulations happen a lot in the cryptocurrency industry. I remember back in, I think it was 2019, we had 3 or 4 different big events where we had whales crashing the price of Bitcoin, for example, on Bitstamp, in order to drive the price of Bitcoin down on BitMEX. So they were shorting the market, rebuying the bottoms, making huge amounts of money. This kind of manipulation used to be more of a game of just, the big mega whales for Bitcoin, but now we have the institutional players which are getting in on the game. By the way, every single week my team and I produce an investor report called Wealth Mastery. This is designed to help give you an edge on the cryptocurrency market. Every single issue contains a deep dive on an altcoin, a trending coin analysis, the latest token sales, the latest airdrops, an interview with an industry leader, a step-by-step DeFi tutorial, a top-tier technical analysis, and much, much more, all for less than $10 a week, meaning this is the most value-packed and at the same time affordable investor report on the market. Click on the link down below me here to get started and don't miss out on another issue. Now, let's get a little bit deeper into this topic here. I want to share this tweet with you from Kevin Svensson. He said, if these whales are able to coordinate a Wyckoff distribution that easily, what else can they do? So the current pattern for Bitcoin fits exactly with a Wyckoff distribution pattern. Now, the interesting thing here is that in the Wyckoff modeling system, there is the comp man. Now, the comp man is essentially the market makers, the whales, the big money guys. We see them executing these strategies, and these strategies tend to have certain patterns. This particular pattern, the Wyckoff distribution that we've seen, is probably a pretty good indicator of the power that institutions have gained over the markets. Kevin said, we're entering a new era of Wall Street manipulation for Bitcoin and for crypto. This is something that I've always said about the entry of people like Wells Fargo and JP Morgan and Goldman Sachs and all these other banks and big financial institutions that have been getting into the crypto markets. They are not our friends. They're not our allies. They're not here to help us. They're here to do the exact opposite. They're here to manipulate the markets and to screw us over. They are bringing their tricks, their games, their manipulation tactics, their investment strategies to the cryptocurrency market. And for these guys, right now, it's so easy to do. It's probably like taking candy from a baby, because the cryptocurrency market, it's so tiny. It's a tiny little baby market. The entire market cap of the entire cryptocurrency market is still less than the market cap of Apple. Think about that. We never even got up to that level. So the entire cryptocurrency market is still worth less than Apple. And of course, that's before the massive dump. We're now worth way, way less than that. But for these guys, manipulating such a relatively small market, it's easier to do. So Kevin says, brace yourselves, all of the models may break. The entry of big money into the market is one of those things that I've been saying for a while as well, is one of the factors that actually could change the Bitcoin 4-year cycle theory, where we go through, we have the Bitcoin halving, we have a massive markup period, we have a 2-year bear market, accumulation period, bull market again, halving, dump, repeat. We may be exiting that phase because the big money guys that are entering the markets, They're changing the game. They're changing how things work. And of course, during this most recent sell-off, what happened? Hedge funds and asset managers bought the Bitcoin dip. Of course, they bought the Bitcoin dip. No one's surprised by that. And of course, you have these people like Scott Minerd. He came out and said, crypto has proven to be tulip mania. Tulip mania, in case you're not familiar, is something that happened in the Netherlands a few hundred years ago where the price of tulips went so crazy that you could trade a tulip for a house. That's how crazy it got. And of course, very, very quickly, it got to the reality that tulips only last for a couple of days. The prices are insane. The prices dropped, etc., etc. Now, why am I bringing up what this guy said? Well, Scott, he is the Global Chief Investment Officer of Guggenheim Partners. Now, Guggenheim, they came out late last year and said they were going to buy like $500 million or something worth of Bitcoin. So this guy, the Chief Investment Officer here, he came out and said, yeah, Bitcoin's going to go to the moon. We're buying. Then Bitcoin went to the moon. He said Bitcoin is going to crash dramatically. There was a slight correction. Then he came out and said, well, Bitcoin's going to $600,000. And now, of course, here he is again. Bitcoin is tulip mania. This guy is part of the crew of the manipulators. This guy is part of the institutional framework that is playing the market like a freaking fiddle right now. These guys know the game. They know how it's done. They understand how to play these markets. And of course, you see news stories like this as well. Big institutional investors are dumping Bitcoin and going back into gold. Except that the charts don't really bear that out. The price of gold has not seen a significant uptick to say that institutional investors have dumped their Bitcoin, gone back into gold. In fact, it would be to an extent silly for institutional investors to do that, because if they really understood the value proposition of Bitcoin, they would understand that it's a gold 2.0 like asset that is worth, I guess now, probably a 15th of the market cap of gold. So that doesn't hold a lot of water with me. And basically, when you understand that's what JP Morgan said, you can't trust it at all. Because JP Morgan fined $1.26 billion for manipulating precious metals markets. JP Morgan has been caught, which means they've done it 50 times more than they've been caught for doing it. But they've been caught for fixing markets multiple times. Precious metal markets, foreign exchange markets, and on it goes. These guys are master manipulators. It is their business model. It is what they do. They manipulate markets. JP Morgan is a fraud company. It is a company based off of criminality. The only reason that JP Morgan hasn't been shut down and that all the executives of JP Morgan aren't in jail is because they're so damn rich and powerful. All that money makes a lot of friends, especially when you can help the most powerful people in the world launder their money and manipulate markets. This is exactly what these institutions are doing. JP Morgan is emblematic of that. So you just have to understand the game here. You have to understand what is actually going on in these markets. Crypto, it is a market that is not going anywhere. It's a market that is going to still deliver unbelievable returns for investors. If you look over the next few years, I mean, again, I take a multi-year time frame on cryptocurrencies, particularly with the premier assets in the market. We're going to go so much higher. The potential for this asset class is absolutely incredible. We're disrupting everything. This is an entirely new asset class that's working with finance and stocks and borrowing and lending and stable assets and breaking down the barriers for everyone in the world. Anyone who has a freaking mobile phone is able to get on board with the crypto revolution. But all that retail money coming in doesn't change the reality that big money, that institutional players, they've arrived, they've brought their games, and they're manipulating the markets. Now they're going to manipulate it up, they're going to manipulate it down. They're going to do what they can to make the market do what they want it to do when they want it to do it. So what do we do as plankton in the market, right? In the seas of finance, us and our little portfolios, what do we do? Well, we practice risk management. We take profits when the things are pumping, you buy the dips, you understand that the market is going to go through these phases where there are 40, 50, 60% dips that come into the market. You buy those dips, and you take a long-term time frame because this asset class isn't going anywhere, even if there is a bear trend that comes in. And when you see things pumping like crazy, you take a little bit of money off the table, you pay yourself, you get your initial capital back out, you move it into something else, or you just leave it sitting there in a high interest stablecoin account like on Wire and Finance. And then when you want to buy some dip, you buy some dip. When you see a big market move like that, you take your money out, you buy some dip, and you've made 15, 20% APY on your dollars while you're waiting to buy that dip. The options are out there for you, and it's a tricky game, crypto, especially if you're new. The learning curve is so big, and to start using all these different tools like DeFi to get great yields and all this stuff, it takes some time to get used to. It takes some time to even discover that these things exist. But that's how winning is done for the average investor. You understand the game that you're playing in. You understand that you are sailing in an ocean that's got some big storms, some big waves, some fine days, but that so much of what happens in these markets, or in your sailing ocean, if you will, it's not determined by just the weather, so to speak. It's determined by these big money players who are rigging the game as much as they possibly can in their favor, not in yours. So it means that as an investor, you've got to be on your toes and be prepared for extreme volatility, because that's exactly what happens in this market. Anyway, just my 2 Satoshis for the day. Your question for today: do you think that big institutions are rigging the game in crypto? Or is that just a bit of a tinfoil hat theory that old Larko came up with here today? Let me know down below in the comment section. Thank you so much for watching today's video, and peace out till next time.